Hello, I'm so grateful that you're here. Today, we're going to be answering some questions that were sent on the drive and also on inbox. And we're going to keep the video we're trying to cut down to make sure that we're keeping the video no longer than half an hour. So we're going to start today. We're going to close off the chat, and the recording now is just going to show the question and answer part. So hopefully you're able to send your questions, and I'm going to try to do 6 questions to be able to combine it in 30 minutes. We'll see what we can do. If we go to 30 minutes, then I'll stop at that point and we'll do another video with these questions, okay? There's another one right now. So the first question has to do with credit card. And the question is, my credit card rate went from 0% to 29.99% APR, and now I am paying interest rates. How to best take care of that? So we've talked about before on the effects of keeping the money to yourself instead of sending it to the bank. So anything if that's charges or late fees or yearly charges that you're paying to any of these creditors is money that is not going towards the principal of the money that you borrow. So the best situation of this client would be to either find, what I would say to this client is find a 0% card that you can apply. Normally, when you have good credit, you have all of these offers that are coming into your mailbox. And I would say transfer. Normally, when you do a 0% transfer, there is an origination fee for that transfer. So you're going to pay 3%, or there's either a 3% or a specific flat amount that the company will charge you. But if you have credit, you always have these types of offers. At the link here on the description of the video, I'll put a link for an offer. I use Discover, I use Capital One, I use, there's a few credit cards that I use. And so they are always offering 0% for, now they have a 15-month offer. And I get offers all the time on my mailbox or my inbox. So if you see an offer that is a 0% and the credit card does not charge you a yearly fee, I would suggest that you roll that over, but then make sure that you have a plan of action to pay off that full amount by the time those 15 months or whatever it is that you received as an offer is due. So how do I teach my clients to do that? Number one, roll it over immediately the moment you can, because every single day that money is not paid to the creditor, there is a finance charge that is attached to that bill. So you want to eliminate that immediately. So if you have a 0% offer in your inbox or in the mail, today is the day to do that. Do not wait until the weekend when you have time. This is a priority because, like I said, every day that you do not pay that balance, you are charged a finance charge. So they will charge you at the end of the month, but every day it accrues more. So this is something that's a priority to you. So do it today. Call, apply for that card. And usually when you have an application for a credit card, it asks you at the end if you want to balance transfer. You say yes at that moment, because what's going to happen is that credit card that you're applying for will automatically pay off the previous one, the one that you want to get rid of. So go ahead and apply for a 0%, ask for a balance transfer, go ahead and swallow the 3% fee, because it's better that you do that than you pay over time these monthly finance charges. Once that balance transfers, the new credit card is going to pay the old credit card off. There's not going to be much of a difference in your credit score. It's not going to weigh not very much on your credit score. You might drop 2 or 3 points on your credit score, but it's not going to do very much. Do not close the credit card that now ended with the 0%. Leave that credit open, because now you're expanding your credit availability. Leave that card open. Just pay it off and leave that card open. And now start paying the minimum of the 0%. So pay the minimum amount every single month. And the remainder of that payment monthly that you want to start building up put in a high yield savings account. I'm going to make you just do an example of numbers. Okay. So let's say that you owe $1,000 on this credit card and the minimum is $25 a month, minimum payment on a monthly basis. But you know that within the 15 months, you want to pay off that $1,000. So you're going to get 1,000 divided by 15 months. Then you're going to get a monthly amount. Then you're going to minus the minimum that it's going to charge you. So I'm going to do that math right now with you. So 1,000 divided by the 15 months, it's going to be $66 up, $67 a month. Minus the 25 that is going to charge you, it's going to be a $41 difference. That $41 difference, what you want to do is you want to put on a high yield savings account, because that 41 times the 12 is going to grow an APY. It's going to grow interest. It's going to grow a dividend for you. So then at the end of the cycle, at the end of the 15 months, then you withdraw the full amount out of the savings account, pay off your credit card, and you have money left over that grew at a high yield there for you. So if you don't have a high yield savings account, check out on my website. I have a link for Marcus, which is giving right now 5.3%, just sitting there. If you have other investments, put that remainder, the difference in between the minimum and the amount a month that you should be paying, and put that on that investment to grow, because the more it grows, the more you have left over. The difference in between giving it to the credit card ahead of time and putting on a high yield savings account is that you have that liquid money in case you need it for something else. At the same time that you're paying off debt, you're growing your money and you have an emergency savings where you do not need to keep putting emergencies on the credit card again. What you want to do is you want to pay the credit card and not accrue any more debt. So that's the strategy, that you want to have liquid assets available to you in case of an emergency. You're paying off that and you're not paying any interest charges. Okay, so that's what I would do with the credit card that you had at 0%, and now you went to something you're now paying finance charges. So if you have anything to add to that, put on the comments, because we want to make sure that we are using all of the strategies that we have available. If you okay, and another thing is that if you do not have a 0% card to transfer to, let's say that your credit is not that great and you don't have those types of offers. Okay, so now you're paying interest on a credit card, but you don't have somewhere to roll it to. I would definitely lean on, if you don't have savings, if you have savings, this is where you're going to go ahead and take the money out of savings and pay the credit card, because you always can refuel the savings that you have. But like I said, the interest charges that you pay to anything is what you want to avoid at all costs. So the savings are for emergencies, and paying interest is an emergency. So you want to eliminate that. If you don't have savings and you don't have good credit to apply for another credit card with 0%, then you can go to your family, borrow from your family and pay them at 0%. Or what you can do is you can call, last case scenario, you're going to call your credit card company and you say, I had 0% up until right now. It went to 20, whatever. I'd like to have a payment plan where I can lower that percentage that I'm paying monthly. And then at that point, then instead of making the minimum payments, what you want to do is you want to tackle as much of the principal as you can. So every time, if that's what you're doing, if you have an arrangement with the credit card company where they're going to lower the APR and you're going to pay the most to the principal, every time you're making a payment above the minimum, call them and make a payment over the phone and ask them to apply that payment to the principal. Most likely they will not allow you. They have their own rules and regulations, but it doesn't cost you. And then the next thing I would ask them is to lower the APR, and then they can actually put your account on a payment plan where you're paying every month a specific amount that's scheduled, and then anything that you have extra, go ahead and make that payment. The reason why I say do make that payment, again, is because if you are paying interest rates every day, it is an accrued interest calculated, and at the end of the month, they're going to put that charge there. It's not a flat rate that they charge you every month. It is every day. So if today you make a lump sum of $100 towards that balance, so it's going to be calculated. So the interest that you're going to be owing them at the end of the month is going to be calculated based on what you owe today. So every single day they add up that amount and then they do that full amount divided by 30. That's what they're going to charge you for the monthly interest rate that they are going to add on to that bill. If you ever looked at your statement when you make a payment, a large percent of that goes towards the interest, and you want to avoid that interest charge being paid to them. And then the last thing I would say is before you make an online payment, try not to make an online payment. When you have the money in your bank account, call them and say, I'm here to try to make a payment, but I would like to request that you give me some kind of a credit. Could you credit me $25 towards my interest charge that was charged last month? Or could you credit me the full charge that was charged last month? So every month, call before you make a payment and see what they can credit you back of the amount of money that you're paying them in interest charges. It does not cost to ask. If you do not ask, for sure you will be charged that amount and you're not gonna get it back. So it doesn't cost to ask. You don't know the person, it doesn't matter, because they're getting their $10 an hour, whatever that is that they're making over there working for the credit card company, and they are usually allowed a percentage of credits automatically. So if you ask, most likely they will provide you with that. So it doesn't cost to ask. Make sure you ask for a credit before you make a payment in order for you to get those benefits if you are being charged an APR. And then again, it's also important to sit down with a financial advisor and create a plan of action so you'll never pay interest rates. And for you, so if you are paying interest rates, that means that you don't have a savings to fall back into. If you are charging more on your credit card, it was because it was usually an unplanned purchase that you have no plan, that you have no net to pay that. You have no safety net to pull from when it comes time for the due date. And that's a pattern that you want to learn to avoid. So if that's something that it happens in your household and you were taught this way and that's how you know how to pay bills, that's something that you can learn not to do again. But usually the mind that creates the problem does not create the solution. So do schedule time to sit down with somebody that can teach you skills and show you tools to help you avoid making those credit card interest payments. Okay, it can be loans too. It doesn't have to be just for credit cards. Any kind of loan that you have that you are paying high interest, you want to try to avoid that at all costs. Okay, that was question number one. I took 15 minutes to answer that question. So the next one is we're looking to purchase a house right now. Market has high interest rates. Should we buy or should we hold? Okay, that's a very common question. I am also a real estate agent and I'm getting that question all the time. And I'm going to just give you my perspective. That's not the right answer because there's no right answer. Every person has their own particular situation. Sometimes you just have to buy a house because your job transferred to you. You have to buy the house. You don't have an option. You could rent, but then I don't believe in renting. I believe in purchasing because that money that you're paying for your living expenses should be something that is a tax deduction for you, and it should be something that you are building on. Every money that I put out there, I want it to come back to me as a benefit. And to me, a rental is only a benefit if somebody's paying the rental to me. Now, I don't like paying rent because I don't want to be paying for somebody else's property or mortgage. So that's my point of view. Doesn't mean that it's for everybody, but for me, that is how I believe that my money should be spent. So if you are thinking of purchasing a home and you're just looking at the rates and going, oh my gosh, there are some options. And I think this is a great time to purchase. The reason I say that is because being a buyer's market. So right now the rates are so high that properties are not selling right away. They're not selling when they're listed. Why is it that they're not selling? It's because people are afraid to pay the high rates. The reason why the question was asked is because I want to buy a house, but I don't want to pay interest on those loans. So I'm going to go, you're going to say that I may be contradicting myself with the last question regarding loans and credit card. But hear me out with regards to this type of decision. A home right now can be purchased for a lower price because there's not really a demand for that property or for that real estate. So as a buyer, you can actually demand a lot more from the seller. You can demand a lower price of the house. You can demand that he does different things, fixes the house a little bit more, spends more money. You can demand for the inspection. You can demand for the assessments. You can demand for a lot of different things because if he has an interested buyer, he's going to do as much as he can to keep you interested in his property. So if you want him to give you an allowance for home appliance insurance or anything like that. But what I do believe that it would be an awesome opportunity for you to close that deal where you are winning and he gets pretty much the same amount is what what blenders call seller, oh gosh, it's escaping me there, seller credit. So as a buyer, you're going to, if you're buying cash, this conversation is not what you need to hear. This is not, this is for the person that's taking a loan to purchase a home. So when you're purchasing a home, you're going to have several costs attached to that, right? Beyond your move, you're going to have a down payment on the house. You have the closing costs, and then you have the interest of the loan that you're purchasing. So if you want to keep the interest low, you're going to put higher down payments. If you want to avoid mortgage insurance, you want to put in at least 20% down on that loan in order for you to avoid mortgage insurance, which is something that you should do. Mortgage insurance is another amount that's looped or thrown inside your mortgage payment that you're going to be paying interest on it forever. So I try to avoid mortgage insurance as much as possible. With regards to title charges and closing costs, I can kind of walk you through that because that's what I do for a living. And there's some things that you should be able to avoid, especially in this economy, with regards to title insurance. We'll talk about that in another video, but that's about a $1,500 to $1,700 savings that you can request. You don't have to pay for that because there's other insurances to that same exact thing. So we'll talk more detail about that. If you have any questions about title insurance, ask me that question because I can give you some more details. But the question with regards to purchasing or not, you can actually ask for a seller credit. And what they will do, they will buy down points for you. So let's say that you have decent credit and the lender is offering you an 8.5, 8.7% right now loan, APR on your loan, right? So you're paying 8%. If you just calculating regularly on a 30-year mortgage, when you get to 4.7, you're going to pay twice as much for the house. So the principal and then the interest will be twice as much at 4.7, 4.8% of the loan. So if anything is above that, you're paying twice as much for that property in interest. Okay, so you want to try to avoid that. How do you do that? You ask for the seller for those credits. So instead of asking the seller to go down on the price of the asking price of the house, you ask him for that amount in seller credits, which is going to buy down your percent. So let's say that you have a house that is $500,000 and you want to offer $30,000 less. Okay, instead of taking the price of the house to $470,000, what you can do is you can ask for those $30,000 in seller credit. What's going to happen is those same $30,000 is going to buy you $30,000 less in interest that you're going to pay the bank. So the seller is going to pay those interest dollars up front towards your loan, which is going to save you a lot of money on monthly payments. You can do a 3-2-1, which the first year your rate, instead of 8.7, let's make rounded numbers. Instead of 8%, you're going to pay 5% on the first year of interest rates because the seller paid some of that amount. And the second year of your mortgage is going to go to 6%. And then the third year is going to go to 7%. So lowers 3 points, lowers 2 points, lower 1 point. So now you see how much you're saving in interest. So now it's not so scary. You can get to a 5% if you ask for seller credit. But these things, so that's going to help you get the same amount of house but you're not paying the interest. So if that's what's holding you back, is the interest rate that's so high, a seller credit is the best thing that you can do as a home right now for a home purchase. And then, of course, election years next year, pretty much we all know that the rates are going to go down, and then you can refinance that loan. So you don't have to be paying 8% after the third year. You can just go and refinance at the best rate that's going to be available. And of course, you're going to be able to work with your credit, make sure that your credit is stellar. So when you do refinance, you have good credit and you get the best offer for you at that time when the rates go down. So yes, I would say buy right now, because there's the sellers are willing to work with you. They're willing to do the things that you request before you put that contract down. So during the inspection time, ask as much as you can. Have a good inspector come and point out everything that can be fixed in that home, and then require that of the seller. And so you have all those things done, all the HVAC fixed, the tile, the roof fixed, all the heavy items fixed. And then you ask them for the seller credit to lower down your interest rate that keeps your interest low. And then so you buy the house newer, and you pay less interest. And then when it comes the time for refinancing, the feds will have to bring down the rates, because the election is coming and people want to get back into office, and they cannot tax us anymore. They have to lower rates. And that's how they're going to buy votes. And that's when you take advantage of the refinancing world. So that's my suggestion. Do buy right now. Ask for all those seller credits, and get into that home that you're looking at, because as soon as the rates go low, everybody's going to be offering in that property, and then you're going to have competition. Then you won't be able to barter with your seller. So that's what I would say regarding home purchases right now. Next question, and I'm going to pick this one because I do like this topic, but the client says, and I never know where my stuff is. I never know my paperwork is. And I never know where my stuff is. I never know where my paperwork is. How do I organize this? He didn't use another. How do I organize my stuff? He used another word. But so I love this question, because I've actually done a full class on this. There are several ways where you can keep everything organized, and it doesn't make you so crazy when you are looking for your documents. If you are just a single person, or if you're a couple and you have children, it is so important to keep your documents organized and safe. Not only organized so we can have a hold of that. How many times we've lost our wallets, or we've needed a scan of a document. We are filling out a form and we don't know the license plate of our car or the policy number of our life insurance, whatever. It's so important for us to have our data, the things that are our documents that are very important, in one spot. Now, a lot of people say, I have it at home, but what if you're traveling, or what if your home has a disaster, in a flood or a fire, and you lose these documents? So I teach my children, I do that for myself and for Ray, and I always do this. I scan our documents. I have everything saved in a drive. I don't trust Google for that. So I do have an email account by Proton Mail. And if you're not familiar with that service, it's a free service for a certain amount of gigabytes. You can buy more to have more space in there. I do have one email account just for my documents. And so I just took the time one day to scan every single document that we have, take pictures. If I cannot put it on the scanner. So I opened up my wallet, all of my credit cards, all of my IDs, front and back of everything. I did the same thing for my husband and my kids, passports, birth certificates, marriage license, the deed and the title of our homes, whatever, life insurance policy, documents, I'm trying to remember, our trust, the documents for our trust, POAs, a power of attorney, anything that has been notarized. All of those documents have been scanned, and it doesn't take much if you know where everything is. It will take a lot if you don't know where everything is. So because I took the time to do that, now I know where all these documents are. And I do have a specific file that I keep here at home that has all the papers, the ones that are so I became a naturalized citizen. I have that document here, and I put it on a envelope that is protected. So it's in here, but it's also scanned. And then I have two places where I keep that. One is a drive, a external drive that is not online. Just in case I lose access to this online drive, or the company goes whatever belly up and I cannot access that. If they are out of line, if online is not existing, then I do have the hard copy of that. So it's on a memory drive, and I update it as I need. If we change, when we moved here to Florida, I just got the new license for Florida and I added on to that. If we have a new credit card that comes in the mail, I just scan it in, delete the old one and put the new one in there. So everything is updated on both the Proton drive and on my external hard drive. So if my son said, Mom, I lost my wallet, my 30-year-old son, I do have his documents, because I just asked him, said, please send it to me, because if you need anything, if you go to the hospital and somebody is calling me and saying you're next to kin and I need his documents, I have it, right? And so you want to make sure that you have accessible documents at all times. And in case of calamity, in case of disaster, and in case of non-internet access, you want to have that drive. If I were to have to evacuate my home, all I need is that drive. I'll take that drive and I have everything that I need in that drive. All my documents, all the passwords, everything that I have is inside that. So I would strongly suggest you just take a day and just take all those pictures, put everything in there. And like I said, I will show you. Well, you know how to spell it. Proton, Proton, is the provider of a safe drive where you can keep all of your documents in there. I think it's 5 gigs for the first free account. And so if you have more than 5 gigs, then open a second account. Yeah, and just make sure that you remember the passwords, right? So don't lose the passwords to that, but have a second way that you can retrieve the passwords, whatever it is that you do that. But the reason why I use Proton is because the center of this company is not in the United States. And so highly unhackable. And if the government decides they need to ask for as a warrant to gather my documents, they're not going to comply, because they're not they don't need to give anything to the government, because they're not saw by the. So that's why I keep it there, because it's very highly unlikely that the documents that are there will be retrieved by anybody else. So Proton Mail, create a free account, and then add your documents in there, and then have yourself a second source of those documents. Save that in an envelope where you have your docs there, and then I carry one in my purse, because then I have it there, and you need a password to open those files. So make sure that you have them safe. I do have another question regarding finance. So tell me that. I'd like to know the difference in between a term life insurance and a whole life insurance. And another one is, how do I best shop for car and boat insurance? I'll go over the insurance real quick. The thing about life insurance, term and whole, I actually have another video regarding that. Let me talk to you a little bit about car and boat insurance. So nowadays here in Florida, everything is super expensive. There's very little competition with regards to insurance. And so what I would say is, if you have time, get together with your spouse or whatever and do a little bit of research. If you just Google cheap insurance near me, find out what your state requires the minimum coverage to be, and then get that, and then get an umbrella insurance. So get two insurances, because if one decides not to pay or one decides to be hard, then you have a second insurance. So one that covers the minimum that the state requires, and then one that's going to cover a little bit more than that. It is going to be more money that you're spending on insurance, but it's going to be well worth it when you do have a claim, both for car and for boat. Now, for home insurance, if you are in Florida or in a disaster state, I know that here in Florida we have issues with Citizens right now because Citizens is the federal backed insurance, and they are now dumping the policies that they picked up during the Irma and the other storm. So during the storm, a lot of people lost insurance. Insurance companies went bankrupt, and there were very few options. So Citizens came in and kind of swooped that in, and now they're starting to sell off those insurances, but they're contacting the homeowners and saying, okay, you need to pick in between 1, 2, and 3. And so when you're asking me about those types of decisions, what you want to make sure is that as you are calling these insurances around, make sure that your minimum is covered. If your car insurance is not covered 100%, most likely your car loan, wherever you got your car loan, will get above insurance and it's going to charge you a lot more for that. So that's why it's very important for you to understand what your state minimums are required to have, because your lender will require those state minimums. And if you don't get it and you provide them your insurance information and it's not covered, and they will require you to go shop around and add on to your policy. If you don't do that during the period of time that they require you to do that, they'll go ahead and get it for you, but they're not going to be cheap about it. They're going to get the most expensive and they're going to add on to your loan costs. So do your due diligence, read the fine line with regards to those coverages and find out what your lender is going to ask you for minimum coverage, because if you don't get it, they'll get it on your behalf and charge you for it, and then charge you interest on top of those things. So don't skimp on that, the reading the fine lines of that. With home insurance, same thing. Right now, Citizens is dumping those clients, and then you want to make sure that you're shopping around. If you are unsure, message me about that, because I do work with 2 brokers here in the Fort Myers area, and they do home, they do car and boat insurance, and they don't only represent one company. They will look at the whole, at anybody that's insuring in Florida. They will look at your credit history and what you can afford, and they'll find the best solution for you. So I do have a couple brokers. I don't want to put their name out here, but if you have questions regarding that, call me up or send me a message and I'll send you their contact. I don't get anything for that, but they do insure my home and my mom's home, and I like their services. And I send them to a lot of my real estate clients. I do like how they find the best deal for you within those guidelines of the state. I did go over the 30 minutes, so I'm gonna skip the long version of the whole and the term, but I'll just give you maybe a couple minutes on that question. So term insurance. So let's switch the gears and not talk about car and boat insurance. We're going to talk about life insurance. So what is the difference between life insurance term and life insurance whole? So, and there's actually, I'm going to bundle in a third one that's called indexed. So life insurance has been around for a very long time. Whole life insurance is the one that has been out the longest, since the 1800s. That's a way for you to leave generational wealth to your children. So although you may not have a lot of savings at your passing, your children can earn a lot of money because you invested in whole life insurance. So whole life insurance is one that you pay for a good portion of your life, and it will pay at death. Your beneficiaries receive a lump sum when you pass away, and that benefit is tax-free. So it's something that you pay a little a month, and then it adds on and they invest it. And when you die, they pay a lump sum to your beneficiaries. That's called whole life insurance. There's a ton of other benefits. That's the more traditional version that I'm giving you. There's a bunch of different products that are in the market right now that allow you to have benefits in life. So because you're paying for that, it's not like a savings account that's going to accrue dividends and pay to your beneficiaries. You could actually on the more less traditional versions, the more updated versions, you can actually have access to those deposits that you're making monthly throughout your life to use them towards purchasing a home or purchasing a car, paying for a wedding, paying for a vacation. So ask me about those things. So that's whole life insurance. Term life insurance, it's usually in between 10 years, 15, 20, 25, or 30 years. So you purchase that when you're young and you're providing for your family in the case to protect your family in case you cannot work or you become you can't work because of you got a condition or you hurt yourself or whatever. So term life will end at a specific point. So most people get it at when they're 30, 20s and 30s, and they'll last until they're 60. No more than that. Once it expires, it expires. You do not retract any money that you paid into that, just like a car insurance. You pay car insurance for the 6 months or the year. And if you don't have an accident, you pay for that and you're insured, but your money doesn't come back to you. Term life insurance is the same. You pay, but it does not come back to you. That's the more traditional. There are some newer products that allow you to get the money back. Whole life insurance is going to be a little bit more expensive because you will receive a dividend. You're going to receive the payout. When you die, you'll get the money. Term life insurance does not have anything that you can cash back. It's super cheap because most likely they're not going to pay you. You're going to outlive the policy. The longer they have is the 30-year policy. And most likely you will outlive, which means you put all this money out there, you're not going to get any of that back. There's a few options, and I like those for my clients. I don't like putting money out there or you're not going to get anything back. And I know you're telling me, okay, you're insured, at least that. But if you can put that money out there, can be insured and get the money back after those years, that's the kind of product that I like to sell to my clients. So there is a term life insurance that's called cashback option. That's the one that I show my clients. It's a little bit more expensive, but you get all that money back in case you don't die within those 30 years, 25 or 10 or whatever it is. Okay. So that's term life insurance. And an index life insurance is the type of insurance that is more you have a cash value to that. So you put out your it's also for your life up until an older age, so maybe 80 or 90. You're going to pay out in the earlier part of your years. You can accumulate cash for a longer period, maybe 10 years or whatever. You cannot withdraw any of that money. But after those 10 years, you can withdraw some of that money and use it towards, again, your wedding or buying a car, buying a house or whatever. So it grew over time. It's locked for a period of time. And then you can withdraw that money, use it. But then if let's say that you don't, at the later part of your year, it starts to consume itself to a point where you're about 80 or 90, there is no more value. So Index Universal's a newer product, and you want to read through the fine print, including the table of benefits, because life insurance is for you to use it when you're alive, but also to be used in case of death. And if you are looking at an index universal life, make sure that you're going to have a payout in case you don't want to use in life, but you will have a payout at death. So make sure that you read carefully. I'm not a fan of index universal, but some people like it because of the returns. So I want to keep it at that because I went 10 minutes over. So I hope this helps answer those questions that were sent. And I do have a few more that rang while we were on the phone call here, and I'll answer those on inbox or maybe keep it for the next phone call. I appreciate you taking the time, and we'll see you next time. Thank you.